What's shaking in the world of stocks? We're kicking things off with a deep dive into Miura's latest valuation shifts after some serious share price activity. Is this industrial giant undervalued, or is the market seeing something we're not? Stick around. Next up, get ready for a shocker, as Hour Loop's earnings have surged an incredible 59%. How did they pull this off with revenue dips and new trade measures? We've got the inside scoop on their cost controls and market resilience. Then, we're blasting into the future with MACOM Technology Solutions. They've just launched a revolutionary chipset for data centers that could change everything. Find out how this innovation is positioning MACOM at the forefront of tech. And finally, CRISPR Therapeutics is back in the spotlight. With shares attracting fresh attention, we're evaluating their valuation. Is this gene editing pioneer undervalued and poised for a major breakthrough? All that and more right here. Don't forget to like, subscribe, and hit that notification bell. Miura's valuation, a deep dive after share price swings. The market is buzzing about Miura, and for good reason. Their shares are currently trading at a price-to-earnings ratio of 13.7x. While this is a bit higher than the industry average, it's actually below some of their closest peers and even below what analysts believe is their fair value. This suggests the market might be playing it safe, unsure if Miura's recent profit surge is a sustainable trend or just a temporary blip. The P/E ratio is a key metric, showing us how much investors are willing to pay for every dollar of Miura's earnings. It's a quick way to gauge market sentiment. The fact that Miura sits in this interesting spot between industry averages and peer valuations hints at moderate expectations for future growth, perhaps even a slight discount for uncertainty. Some might see this as a sign that the company's recent performance improvements aren't fully convincing the market yet. Despite these valuation questions, Miura's fair value is estimated at $6,356.15, indicating it might be currently undervalued. However, persistent weakness in long-term returns and ongoing doubts about profit sustainability are significant risks that could challenge any optimistic outlook. Even a discounted cash flow model suggests Miura is trading below its true worth. So, what's the real story? The market's current valuation might not be capturing the full picture. Investors are weighing recent gains against potential future challenges. But is this the whole story? We're about to explore how other companies are navigating market volatility. Next up, we're looking at Hour Loop and their incredible earnings surge. Hour Loop's earnings explosion, resilience amidst headwinds. Hour Loop stock has been on an absolute tear, soaring an astonishing 59% recently, and investors are loving it. What's even more impressive is that this massive jump in earnings per share happened despite a slight dip in revenue and the tough new U.S. trade measures targeting Chinese imports. The company's leadership is pointing to incredibly tight cost controls and smart internal enhancements as the secret sauce, helping them navigate these ongoing market disruptions. This isn't just a flash in the pan. The momentum has been building, with the stock climbing nearly 92% in just the past month, and a staggering 191% over 3 months, capping off a 166% rise in the last year. Even with softer revenues, Hour Loop's improved operating margins and laser focus on efficiency are giving market watchers serious reasons to be optimistic. The key takeaway here is resilience. Hour Loop is showing it can deliver operational gains even when the global economic winds are blowing hard. After such a dramatic performance, the big question is Hour Loop still a buy, or has the market already priced in all this future growth? Based on its price-to-sales ratio, Hour Loop looks a bit pricey compared to its peers, trading at 0.9x, while the sector average is just 0.4x. This higher valuation suggests investors are betting on significant future growth or operational improvements that set Hour Loop apart. However, there's a risk that this optimism might be a bit overblown, especially given recent market volatility and past earnings declines. Investors need to carefully consider if this premium is truly justified by the company's actual performance and future prospects. The fair value is estimated at $3.59, but it appears overvalued right now. Furthermore, if growth falters or competition heats up, the current bullish sentiment could quickly evaporate. A deeper dive with a discounted cash flow model doesn't offer a clear picture, leaving investors to decide whether to trust what they see or worry about what they can't. Can our loop maintain this incredible run? We'll have to wait and see. Now, let's shift gears to the cutting edge of technology with MACOM Technology Solutions. MACOM Technology Solutions launches game-changing data center chipset. MACOM Technology Solutions has just dropped a bombshell in the tech world with a brand new chipset designed to tackle one of the biggest headaches in modern data centers, extending PCIe and CXL connectivity over optical fiber up to 100 meters. This innovation is a massive win for disaggregated computing, promising greater efficiency and higher performance. As data centers crave faster, more flexible, and lower latency data transfer, MACOM's new solution could catapult them to the forefront of this rapidly evolving market. This announcement comes on the heels of a fantastic year for MACOM, with their stock already climbing an impressive 30%, outpacing the broader tech sector. While the share price has held steady recently, buoyed by consistent revenue growth and a string of product reveals, the long-term excitement stems from their strong multi-year returns and knack for capitalizing on industry inflection points. With data centers and cloud providers laser-focused on efficiency and scalability, MACOM's continuous innovation is clearly boosting investor confidence and reshaping risk perceptions. After a year of stellar performance and a promising new product launch, the key question is whether this presents a genuine buying opportunity or if the market has already factored in MACOM's future potential. The prevailing market sentiment views MACOM as significantly undervalued, with a notable gap between its current stock price and its estimated fair value of $149.29. The company's commitment to R&D and strategic acquisitions, backed by a substantial $735 million in cash, positions them perfectly to innovate in optical, RF, and mixed-signal applications. This is expected to fuel accelerated growth in earnings per share and free cash flow as new industry standards gain traction. This optimistic price target hinges on growth assumptions that significantly outpace current profits and a market re-rating typically seen with industry leaders. However, potential execution issues at their RTP fab or unexpected volatility in the data center market could quickly dampen MACOM's growth prospects and challenge the current valuation optimism. There's also a counter-narrative. Looking at MACOM through a simpler sales-based metric, they appear expensive compared to their U.S. semiconductor industry peers. This raises the question, has the optimistic growth scenario gotten ahead of reality? Will MACOM's innovation pay off? The tech world is watching closely. Finally, let's turn our attention to the exciting developments in gene editing with CRISPR Therapeutics. CRISPR Therapeutics, navigating valuation amidst growing interest. CRISPR Therapeutics is capturing significant attention, and its valuation is under the microscope. Currently, the stock trades at a price-to-book ratio of 3, which is higher than the U.S. biotech's industry average of 2.2, but still below the peer average of 5.4. This suggests that while CRISPR Therapeutics is valued more richly than many in its industry based on its book value, it offers relative value compared to some of the top innovators in the gene editing space. The price-to-book ratio is a crucial metric, especially for biotech firms like CRISPR Therapeutics that invest heavily in research and may not yet be profitable. It offers insight into how much the market is willing to pay for each dollar of net asset value, signaling expectations for future breakthroughs and long-term growth potential. Although the company appears somewhat expensive against the broader industry average, its valuation becomes more favorable when compared to similar cutting-edge firms. This pricing likely reflects anticipation of robust revenue growth and significant pipeline advancements, even though current earnings are still in the red. The estimated fair value for CRISPR Therapeutics stands at $143.16, indicating it could be undervalued. However, investors must consider the inherent risks, such as volatile revenue streams and ongoing net losses, which could rapidly alter market perceptions and make future gains less certain. A discounted cash flow model presents a different view, suggesting the stock might actually be undervalued, adding another layer to the valuation debate. Which perspective holds more weight? Will CRISPR Therapeutics unlock the next big medical breakthrough? That wraps up our market update. Stay tuned for the full recap and your essential CTA. All right, let's do a lightning-fast recap. Miura's valuation is sparking debate after recent share activity. Our Loop is defying odds with a massive earnings surge despite revenue challenges. MACOM Technology Solutions is pushing boundaries with a new data center chipset set to revolutionize connectivity. And CRISPR Therapeutics is back in focus as investors evaluate its promising, yet risky, gene-editing ventures. Don't miss out on the next big thing. Hit that subscribe button, ring the notification bell, drop a comment below with your thoughts, and follow us on all social platforms for real-time updates. You won't want to miss what's coming next.